Welcome, Mr. Dome, and welcome to this crypto update. Now, today's update is going to be an interesting one because we do have on Wednesday, we will have a Fed meeting where they could cut interest rates. I don't think they will cut, but I will give you my full analysis in this video about the rate cuts. Also, the United States government has had some new trade deals, so we will talk about those. Obviously, we will look at the fundamentals, some other news relating crypto, and then I will give you my full technical analysis at the end of the video as well. But just in short, you can see that the price of Bitcoin is basically now breaking from this downward trend line. Now you can clearly see that there is still some resistance up ahead, so it doesn't mean we immediately break to the upside. And also this lower part where we had the liquidity zone did not get completely filled, so that is still a danger zone. But all in all, it looks quite bullish as of now. There's some warning signs in the air, which I will also talk about at the end of the video. Now let's head to the news here, and the first part is the Fed meeting on Wednesday. What can we expect from the Fed meeting? On Investopedia, they are basically boiling it down that there will not be interest rates cut on Wednesday, but the markets are watching for any signs that maybe there will be cuts that could start in September. So as of now, it doesn't look like there will be any rate cuts. And if we hop over to Polymarket, you can see that people are betting that there's 95.6% chance that there will be no change in rate policy. So most likely there's not going to be rate cuts. There's only going to be 4.5% chance that there's going to be a rate cut on this Wednesday. So very unlikely there will be any rate cuts, but hopefully they will hint at potential rate cuts down the line. That is basically the best hope. Now, how likely is it that we will get rate cuts by September? Let's go and take a look at the 2-year Treasury bond yield, because this is the key indicator to follow if the Fed will cut interest rates or not, because the Fed funds rate is basically just following this 2-year Treasury bond yield. And here we can see that as of now, basically since when the tariffs were implemented at first, since then the bond yields have actually been rising. Now, if you just chart this out, you can see that there's some hope that this might actually break to the downside, because typically when we see a move from the upside to this box here or this triangle, it goes up and down inside the triangle, but typically these like to break to the downside. So if we see a move to the downside on the 2-year Treasury yield, then it's likely that Fed will actually cut interest rates. But I believe, based on this chart, that the Fed, the Jay Powell, he is not ready to even signal a rate cut as of now. That's what I believe, but we'll see how that turns out. I think it's gonna be a letdown, which could give us that signal that markets are like, oh no, there will not be any rate cuts. So we could go and tag these lows on Wednesday. So by Wednesday, we could see some move to the downside, but then I think the markets will get hopeful again and we go back to the upside. So that's basically my take on the Fed cuts. And let's see on at the end of the week if my prediction actually plays out. Now, talking about the new announcements from the White House, basically saying that the tariffs have been a huge success. $700 billion of new revenue per year. That's $7 trillion in 10 years. And then Scott Bessent also came out and basically congratulated President Trump to basically opening up European Union for negotiating this landmark trade deal. Now, I think I will make a separate video just talking about the tariffs, because I think all of these numbers are basically bogus. All of them are exaggerations, and these more likely than not will backfire against the United States. So I will make a separate video about this, but as of now, the markets are taking this as a good sign, but down the line, I think this will come back to haunt the United States. And the key number to look at, in my opinion, is the tariffs were supposed to bring manufacturing back to United States. And when we take a look at the employee data for manufacturing, and we take a look at this chart, you can see that since the 2000s, the amount of manufacturing jobs has steadily declined, except since the Great Recession, the manufacturing jobs have actually increased, and they have been pretty stagnant for a while. And just the last 1 year alone, basically since the tariffs were implemented in April, this has continued to go to the downside. So we will get the new number basically at the start of August, but I don't think this will actually go up. So I will make a separate video just trashing the tariffs. So I'm not going to spend more time in this video, but the markets are basically hopeful that this is a good thing. Then let's talk about what happened since my last update with in regards to the 80,009 Bitcoin. Well, all of that Bitcoin were actually sold basically on Friday alone. And that gave us this dip to the downside here. And when I was making the update, Bitcoin was already almost bottoming out, even though only half of the Bitcoin were sold. So in my opinion, that was quite interesting that that was the case. But at least according to Galaxy Digital, you can see in this paper here that they actually executed one of the largest notional Bitcoin transactions in history of crypto on behalf of a client. So most likely the transaction was completely legit. There was no foul play, no hacking, none of that was actually involved here. And it seemed like this was actually a sale. Now, it doesn't specify if it was a sale or not. I speculate that maybe not all of the Bitcoin were actually sold. Maybe some of the Bitcoin were simply shuffled through the exchanges and dispersed between multiple different wallets, and now they are in institutional custody. It could be that all of the 80,000 were sold, but it doesn't specify it here. They only talk about the transactions. So that's basically my speculation why the markets did not dump as much as I was thinking, is that they were not actually selling all of the Bitcoin. And maybe they found it was like partly an OTC trade where they found the buyers beforehand, and they simply shuffled the funds through exchanges, and that's basically how they ended up not basically dumping the whole market. That's my speculation. We obviously don't have any data on that because all of the data is in the hands of the exchanges. But all in all, this sell pressure is now done. Now, what could be annoying down the line is that there was another whale from 2011 who just woke up and sold or moved 14,000 Bitcoin as well. So if we start to see more and more of these old wallets basically waking up and selling, then that will be an indicator that the whales have come out and they are now selling because there's so much buying on the markets that they are able to basically dump these Bitcoin on the open market. So this could be a warning signal that we are basically approaching a potential top. So be mindful that this is now ongoing, that these whales are waking up. As of now, the Bitcoin markets are simply buying it all, and we're still getting a lot of buying basically across the board. So I wouldn't get worried as of now, just to make a mental note of this going on. Then we had SharpLink Gaming, which transferred 145 million USDC to Galaxy Digital, and they are buying Ethereum with that capital. And like I showed you in previous updates, SharpLink is basically aiming to buy $5 billion worth of Ethereum. So now they purchased another $145 million, and this is basically pushing Ethereum higher as well. So very good news on Ethereum. Then we saw Metaplanet buying another 780 Bitcoin valued at $100 million as well. So that was great. And Michael Saylor is here basically congratulating them as well. And Michael Saylor has chimed in once again, posted this chart, and this time the message is a little bit more cryptic. It all began with a $250 million in Bitcoin. I'm not 100% sure if he's gonna buy this week or not, but I guess he will, because he's not saying otherwise. And we've grown accustomed to seeing Michael Saylor announcing Bitcoin he bought the previous week whenever he posts this chart. So on my next update, we will have an answer, obviously. And if you follow him on Twitter, you will get the answer in the next 12 to 24 hours. So all in all, I think this we will see another purchase from Saylor. Then let's actually head over and take a look at the fundamentals. On the ETF side, we saw $130 million worth of inflows on Bitcoin ETFs. As you can see, these are going down and down, which means that the hype around Bitcoin is unfortunately slowing down. So this could be another warning signal, because we want to see higher numbers here, obviously. Now, what I kind of expect is, because we saw those whale selling on Friday, maybe some institutions have actually panicked, and we could see a red number here on Monday. So I'm not, even if I see a red number on Monday, I think the numbers will turn green by the end of the week again. It's simply some investors may actually get scared when we see a lot of selling, and they made big headlines. So that sell pressure or panic selling, it could happen on Monday's number. We could see it, but at least on Friday's number, we did not see any real panic as of now. So all in all, these are still growing. The ETF buying continues, so that's good. But then on the Ethereum side, we see another very interesting number, which is a inflow of $450 million. So there's no slowing down on the Ethereum front at all. And that's one of the reasons why Ethereum is pumping quite hard as of now, making this video. So Ethereum seems to be stealing a lot of the wind from Bitcoin, which is very nice to see for potential altcoin increases. And then hopping over to fundamental side, when we look at the Bitcoin supply on exchanges, what we actually saw was a removal of Bitcoin. So many of the Bitcoin, like I told you guys, it went into the exchange reserves when Galaxy Digital was dumping it. But from there, the net effect has been that Bitcoin has been leaving exchanges. So most likely what I told you in the beginning, that, or told you about when we talked about the 80,009 Bitcoin, as you can see, many of that Bitcoin has already left exchange wallets. So maybe there has been some OTC trades, because this is, in my opinion, clear that somebody was actively buying it from the exchanges. So I don't know where the Bitcoin went. I didn't follow that closely, but many of the Bitcoin that entered into exchanges from the 80,009 has already left the exchanges. Then what's a little bit worrying as well is when we take a look at the funding rates, these are not dangerously high as of now, but there is a clear sign of a growing disbalance between longs and shorts. So as of now, many people are longing Bitcoin on a futures markets, or it starts to be outgrowing the shorts. So it's not crazy overextended as of now, but we are seeing a heating up here on funding rates. Looking at the market cap of stablecoins, no real update since Friday, $229 billion. But overall, this is still growing, which is obviously good for crypto. And then looking at very, very old wallets, we have not seen an activation here on these wallets. And no clear sign of a potential top here, or like whale selling in masses. We're seeing some wallets waking up, but at least on sentiment, we're not seeing any major spikes as of now. So this is fundamentally speaking good. So again, we're getting a mixed bag of signals, but as of now, we're not seeing major sell pressure, which leads me to believe that Bitcoin is going higher from these price levels. I think the 130k is basically around the corner, and then we could even aim for 155k, which was the other target I have shown in the past. Now, hopping over to CryptoQuant, I do want to mention something which is the Ethereum 2.0 staking rate. So Ethereum 2.0 staking rate shows us how much of the Ethereum supply is being staked on the new staking platform that they introduced last year or the year before. And as of now, this has started to grow significantly since of May 2025. As you can see, this means that investors are looking to invest into Ethereum in long term. And as this is growing exponentially, I believe that the Ethereum price will catch up. So Ethereum is likely to break the previous all-time high at 4.8k at some time this year. I believe that is simply a matter of time. We're seeing the the ETFs accumulate Ethereum. We're seeing public companies acquire Ethereum and accumulating it, and then we're even seeing stakers basically committing to the long-term strategy of Ethereum. And again, I would consider watching my video on Lido Finance, which is directly tied to liquid staking of Ethereum as well. But anyway, this is an extremely good indicator what is basically about to come for Ethereum. I don't really want to touch on anything else here, but in the short-term fundamentals, looking at the liquidation heat map, like I showed you in the previous update, we tagged this liquidation zone here, but we did not tag this 113k yet. So that danger unfortunately still looms over there. But because we didn't touch it, a lot of people are now longing Bitcoin. And we do have the liquidation zone basically stretching all the way to 123k as of now. So both of these are still in play. It's less likely that we go to 113k anymore, but I think there will be at least another attempt to go there before we really start to see high numbers of Bitcoin price. Now, heading over to aggregated spot order book depth, what we're basically seeing on the spot markets is a lot of buying. So again, talking about the 80,000 Bitcoin whale, we saw this anomaly here on the chart, which was just a lot of limit buy orders on the order books, basically hitting the exchanges at the same exact time when all of the Bitcoin from that whale were entering into exchange wallets. So this is basically how they changed the hands between those, just a lot of buying. But after that whale basically dumped the Bitcoin on exchanges, after that you started to see that suddenly we have this limit sell pressure on the spot markets. And at the height here, when Bitcoin was 118k, we saw a negative delta of $200 million. Now, usually when we see a high delta here, if the momentum is there, then we can see more higher prices. But at least as of now, this seems to have normalized. And this is basically what we would expect when Bitcoin is trying to push higher, is a negative delta here on the limit buy limit sell order difference. On the futures side, we are seeing quite a bit of buying as of now, and this is a little bit worrying when I see futures markets having a lot of buy orders ready to be fired, whereas on the spot order books we see a lot of limit sell orders entering. But the good news is that, as you can see, as Bitcoin is pushing higher, the limit sell orders are diminishing. So as of now, the buy pressure, at least between Monday and Sunday and Monday, the buyers are basically snatching up all of the Bitcoin as of now. So I think we could break upwards through this momentum here. And then by Wednesday, I think we will have that dip, because the Fed will not cut interest rates and it will not signal any rate cut. And that will be the dip. And then we could actually go and tag the liquidation zone. If not, then that will probably be the small dip there. And then we push higher by the end of the week. That's basically what I'm currently expecting. So when I map all of that into the chart here, what I kind of expect as of now is that the momentum here could take Bitcoin higher. We take out this liquidation zone here, and then by Wednesday, this will actually go like this, and then by Wednesday we try to push lower here. It could go all the way down here as well to take out this liquidation zone at 113k, and that would be perfect. But it doesn't have to happen. What I do expect to happen basically is to push upwards from here in the short term to go to that 130k price level. That is basically my expectation for August, that we hit 130k by then. So that's basically my idea here. Now, the worrying sign that I told you guys in the beginning of the video is when I head over to the weekly view on the Bitcoin. And if you like to think about diminishing momentum, then you want to look at the RSI. And on the RSI, what we are currently witnessing is a downtrend on momentum. So we see lower highs week after week. Whenever Bitcoin is pushing for higher prices, the momentum is dwindling to the downside. And as of now, this is a bearish divergence when price is pushing higher and the RSI is having lower highs. So this is a major warning sign that we could actually see lower numbers. So I'm still optimistic that this inverse head and shoulders will play out, and we will not break 111k price level to the downside. If we do break that, then I think this will play out, and then we will head lower, and price targets for that would be about 90k, because there we have the open CME gaps that I will show you very, very soon. But as of now, because price is above 111k, I don't think this reality will actually play out, that we will see those prices. But it's always a possibility, and typically when you do technical analysis, you see contradicting information at the same time. So this here, it could also break to the upside, and that's basically kind of what I'm expecting. I don't know what it's more likely, but I'm expecting it to break to the upside, or I'm optimistic it will break to the upside. But if we go below 111k, then my sentiment will likely change. So this is basically the warning sign that I'm looking after. But as of now, it's likely we go higher. Now, looking at the CME gaps, there's a couple of CME gaps that you have to be mindful of. So like I told you guys here, going to the daily level, you can see this 91k price level that I just mentioned. This is basically the lowest CME gap that we have on the chart that is relevant in any terms, and this is where price would like to go if that 111k is broken down to. But as you can see here, this is we have a new liquidation zone here, or basically this is the same liquidation zone, but now we have the CME gap basically here as well. So $114,400. This CME gap did not get filled with this dump here that we saw by Friday. So it's likely that there will be another attempt into this box here to take out this CME gap, and also it is the liquidation zone for those longs that I showed you earlier. So likely we go up first, and then we have an attempt to go push downwards, and then we will see if this will hold, and I believe it will, because a lot of people will be buying in this box if price will go here. It doesn't have to go there, but I think there will be another attempt on Wednesday. But all in all, this is basically my idea that by the start of the week, Monday, Tuesday will be bullish, and then people will get skeptical by Wednesday. They wait for the Fed meeting, and there will be no mention of potential rate cuts, and that will give us the chance to basically snatch assets a little bit lower one more time, and then by the end of the week we will push higher because the buying is still so consistent across the board. So that's it for this update video. Now, if you want to help support this channel, make sure to subscribe, like the video, maybe even leave a comment in the below, and consider using my affiliate links for exchanges if you want to get a crypto.com debit card where you are able to spend crypto and get cash back for your purchases in the real world. You can sign up for that and many others in the link in the description. Thanks for watching this video. I will see you on the next one, and bye bye.